Hello everybody, welcome back to my channel. So today is Tuesday, the 11th of March 2025, and I'm sharing with you my trades for today, or the trades that I took today. Now if you watched my previous video, you may remember that you saw my losses yesterday, and towards the end of that video I did mention that there was a daily fair value gap below where price was trading at the moment when I was making that video, and I did allude to that price was sort of trying to get down to that bullish fair value gap, the daily bullish fair value gap, and it ended up doing so towards the end of the night yesterday. And today I was looking for buys based on that price has tapped into a bullish fair value gap that is daily, and the daily time frame is a higher time frame, and it is more important and stronger. It tends to pull price towards itself and push price away from itself. However, the weekly would be stronger than the daily, and the monthly would be stronger than the weekly. So it's very important to understand that, and this is the whole point I was basing my trades on. Now let's look into the charts here. I'll start from the monthly because I actually do a top-down analysis. And what that means is that I start from the monthly, or the highest time frame, which is the monthly for me. And when I'm looking at the monthly time frame here, you'll realize that we see the three consecutive, or the three previous candles, which are monthly candles, which is January, February, and currently March, are bullish candles. These candles show that price is trying to reach higher. Now, when I do this analysis, I first check to see whether there is a fair value gap, bullish fair value gap in this case, as the market is bullish, that price is trying to go down to, or to dip into, and then push higher. And looking at the monthly here, we do see that we have a bullish fair value gap here. Mark it out for you to see. That bullish fair value gap is a monthly fair value gap. But looking at where price is trading now, and the fact that this current candle, the March candle, is bullish, we are not at all trying to reach down to this monthly fair value gap at this time. What it seems like we're doing is that we are reaching higher for this high up here. Before we could move down into this bullish fair value gap, it seems logical to first hit or reach this high and then push lower. Therefore, we do not have basis for trades on the monthly, so we can't take any trades based on the monthly. But what the monthly time frame is telling us right here is that we are bullish. The market is trying to reach higher. And then we will then move down into the weekly to see what we have there. And on the weekly time frame, we realize that this current week is actually trying to expand higher at this moment, but it has been down here, and that blue rectangle, that small blue rectangle you're seeing here, is a daily fair value gap. And since price has been down here, it seems it is trying to reach up for this high right there. Now, where was price coming from for it to now try to burst higher? We see here that we have a weekly fair value gap, a weekly fair value gap down here that was traded into at around the 23rd of February. So that's the week that started on the 23rd of February. That should have been a Monday, or is it a Sunday? Not sure. But we come from this bullish fair value gap, that is a weekly fair value gap, by this bearish candle right here, tapping into this bullish fair value gap. And the next candle, which is the candle of the week of the 2nd of March, pushed higher but failed to reach the high of that previous week right there. And this current week that we are on here is this small candle with a long wick. That's what we are trying to see, or that's what we are trying to determine. How will it deliver? Now, here on the weekly as well, we see that we do not have a fair value gap, whether bearish or bullish, for us to tap into and then push lower or higher from. It has already happened, and the move is not yet complete, because the target for this move here is that candle high up there. Let me mark it out for you to see. This is where the target is for that whole move. This tapping into this fair value gap here, price tapping into this fair value gap and pushing higher. Our anticipation is that it will push higher and reach this high. Then we will then reevaluate what happens after that. And so far it seems price is trying to do exactly that, but it can take some time. I should mention that these types of trades are taken by swing traders or position traders, people who would be in a trade for days or even weeks or more. There are some people who do take trades like that. Now that we've seen the weekly here, let's then move into the daily, which is where our focus is, or where we realized that we could take a trade. Now, as I was saying yesterday, I was trying to look for longs, but it seems it was a day for shorts. As you can see, this daily candle is entirely bearish, and it tapped into this daily fair value gap down here, and the candle of the 11th of March opened, went lower, tapping into that fair value gap, the daily fair value gap, and expanded higher. And my prediction was that it will go high and take out the high of the previous day, which is this line here. And that has happened. Now, in today's video, I'm just trying to show you how I took these trades and where I took these trades. Now, when you find a setup, or when you find price action like this, where a fair value gap, the daily fair value gap in this case, is visited or traded into, you want to drop down into the hourly time frame. This is where you'll be looking for your entries. Let's do that here. Dropping down into the hourly, we find that here is that bullish daily fair value gap, and we see that price came down into this fair value gap down here and immediately wicked the fair value gap down here, which means it only entered using wicks into this fair value gap. There was no body or a candle that closed inside this fair value gap. And what we say this is doing is that price is respecting this daily fair value gap. Now, it means any candle that you see that is not closing inside this fair value gap down here is respecting this fair value gap, which means this fair value gap is holding and is pushing price higher. But you will know that price is holding the moment it starts creating fair value gaps higher or lower, in the case where this would have been a bearish scenario. But in this case, we have a bullish scenario. Now, the first thing we realize is that right after this fair value gap pushed price into this daily fair value gap, we see that there is immediately a bullish fair value gap on the hourly, pushing price out of that fair value gap. And usually we would wait to see what happens here. What we're looking for is for price to retrace into this initial fair value gap and form a new fair value gap. But in this case, it formed what we call a bag or a breakaway gap. Now, if you are already trading or studying ICT concepts, you would know what a breakaway gap is. A breakaway gap in this case is simply a fair value gap where this third candle, because a fair value gap is formed by 3 candles. Candle number 1 here, this is candle number 2, and this is candle number 3. Once candle number 3 closes above this high, we call that fair value gap a breakaway gap, abbreviated as BAG. And we see that price didn't even bother to come back down into this breakaway gap, and it created a new fair value gap, which we call a perfect fair value gap, PFVG. And the plus that you see here simply means it's bullish. And the reason we say it's perfect is because the third candle, which is candle number 1, number 2, third candle here, number 3, closed below the high of candle number 2. Candle number 3 closes down here. Here is the high of candle number 2, and it closes down here. This is a perfect fair value gap. This is the type of fair value gap that you want to trade off of, which means you want to enter trades in here. Now, price did do that and come back and hit even the midpoint of this perfect fair value gap, and that is where our entry was. Here, I'll use the tool to place it. This is where I had placed my trade, and the stop losses were right at the bodies of these candles down here that were wicking the daily fair value gap. You see, we are almost, confident that price is not going to try to come down here, because all these candles were respecting this daily fair value gap. And in this case, then we say we will put our stop loss right on the bodies, not at the lows, because once we do that, then we're opening up our stop loss way too much, and our 1:2 ratio will not work here. Or sometimes it will work. In this case, it looks like it would have worked, but you would have waited the whole day for this whole trade to play out. Now, as you can see, I already have a trade tool placed there to show you where the trade was placed. Right there. And this is a 1:2 risk to reward ratio. And that's how the entry was taken. And as you can see here, we had marked that high, the previous day high, saying that we will enter down here and we would love to see price shoot higher and deliver into that high. So you may be asking yourself that what then happens now that our 1:2 doesn't cover the whole move? And the perfect answer for that is that we get what is called re-entries. We will re-enter when the market presents an opportunity for us to do so. And the way the market does that is that this is a fair value gap that we entered off of. And usually when price is trying to reach a draw on liquidity, it will form a new fair value gap just after tapping into an old fair value gap. So right here, you see it didn't happen. But when we drop into the 15-minute time frame, that happened. This is the initial trade that was placed. And right there, right from this low to that high, there's a fair value gap here. And we see price retracing into that fair value gap. This is an entry. Stop loss right at these lows here, or simply at the previous entry, and targeting 1:2 risk to reward. And so this is how it would have been. Let's have 1:2 here. And there, your trade would have also materialized right there. Okay, so I'll just remove these so that we have a clean chart. And then as price keeps going, we realize that after creating this fair value gap, it retraces into that fair value gap. That's where we would have entered, and it pushes higher, creating more fair value gaps. Let's go back to the 1 hour so that we see a clean price action. Then we see that this is a new fair value gap, but realize that I also have marked it as a breakaway gap. Remember what I said about breakaway gap. A breakaway gap is a fair value gap whereby price closes above the high of candle number 2. Remember, a fair value gap is formed by 3 candles. Candle number 1, candle number 2, candle number 3. When candle number 3 closes above the high of candle number 2, just as it did here, then this is a breakaway gap. And you'll realize that indeed price, after creating a fair value gap, a breakaway gap, simply pushed higher, and then just before it hit this high, it came back down into a breakaway gap. There's a misconception that a breakaway gap will never be traded into, and that is simply not true. It will be traded into, but in that moment when you spot it, it is a breakaway gap because it follows these rules that I just explained now about a breakaway gap. But this would have been another re-entry, but this is not going to be a good entry, because if I were to show it to you, to say then let's put our trade tool here and have our stop loss at the previous swing low, or the most recent swing low, which is right down here inside that fair value gap where we entered our initial entry, then our 1:2 ends up falling out of bounds of this high or previous day high, and we don't want to find ourselves targeting or entering trades actually very close to our target, because this is like our overall target for the day. We don't want to see ourselves entering into trades saying we're still going higher very close to this high here. And the reason is because we are on the hourly here. There could be a 4-hour fair value gap that is formed just below where price is trading, and price will indeed go deeper into the 4-hourly fair value gap instead of just retracing into the 1-hour fair value gap. As we said, these time frames tend to become stronger as you go higher in time frames. The lower you go, the weaker these fair value gaps are, and so that's why a trade was not placed right here. And that is how I placed trades today on gold, redeeming myself from my losses on the 10th of March. I keep saying May of March 2025. All right, so I'd like to show you one of my accounts where I took my trades, because I had a problem with my screen recorder. When I tried to save my video couldn't be saved, so I don't have actual footage of these trades. I do have like a phone footage of part of the trades, so my footage when I was placing these trades is not available at this point. Hence, I'm creating a video where I'm explaining or sort of like analyzing or doing a hindsight kind of analysis for you. Now let's go into this here. Just a disclaimer: this is a prop firm challenge account, and so I do have a personal account, and I also trade a prop firm account as well. And so this would have been the daily time frame and how it looked, but you may realize that there isn't a fair value gap here on the daily on this trade locker chart. But since I saw that fair value gap on my personal broker, I simply drew it in and it indeed followed through. As you'll see, the target would have had to be right here, would have been up here, and the target was still hit, fair value gap respected, everything was the same. So let's drop into the hourly so you could see the executions. There is the hour. Okay, so this is how the chart looked. Right here, you see right here, it was last night. As you can see, it's the 10th of March 2025 around 4 p.m. New York time. So I saw this happen and I became hasty and entered a trade right there before I went to bed, and I was like, nah, if this move rips off and goes on without me, I'd feel bummed. So I placed a trade there with a very small stop loss of $19, I think, and that trade was a loss. As you can see right here, the trade 2 is showing us. And then the following day, which is today, 11th of March, these were the trades that I took. Here is that let me just remove these tools for you to see. Here is the breakaway gap that I mentioned in the other chart, and then here's the perfect fair value gap that I also mentioned in the other chart, and this is where the entries would have been. Now right here is where I entered my original trade, and up here I was pyramiding. As I said, there was a chance for another entry, but the problem is that I don't know how this happened. When I clicked on buy, somehow the trade platform entered 2 trades, but I was comfortable. I just let those 2 trades run, so I had 3 trades. As you can see, here is the first trade, and here is the second, and here is the third. And so I just had to make sure that I managed them well. And as you can see, the whole move was taken. The whole move is what I managed to catch right here with all these 3 trades. And so that is how I traded today on the 11th of March 2025. I hope this content is helpful to some of you, or is helping somebody out there, or maybe enjoyable. Like, comment, and subscribe. Ask me questions if you need to. Make suggestions of videos you would like to see me make. I would appreciate that a lot. Thank you for watching, guys, and I'll see you in the next video.